Welcome back, everyone. Welcome back to Trade Masters. I'm excited to share this lesson with you guys today. If you watched our Start Here video, this is definitely the natural step to take next. And I want to say something really clear up front. This video is not about a hot pick, magic indicators, or some secret setup that suddenly makes trading easy. That is not how we teach. This video is about a serious beginner or a person who's even struggling, what they should do in the first 30 days before risking real money. Because one of the biggest mistakes new traders make is rushing into things. They rush into finding a strategy, they rush to take trades, they rush into to make money before they have real structure, and that usually gets expensive. So in this video, we are going to try to slow it down just a bit and give you a clear roadmap. Now, this won't be an exhaustive way of doing things, but it'll give you a roadmap to start. So the goal of the first 30 days is not to prove that you can make money. The goal is to actually build understanding and then structure and then self-control. Around here at Trade Masters, we believe you should learn in an order. Build structure first, then practice before pressure. So let's walk through the practical 30-day path that helps you start the right kind of way. So let me start with the biggest mindset shift in this roadmap. Most new traders, not all, but most new traders come in asking, what should I trade today? And listen, I get it. The question makes sense. You open the chart, the market's moving, and you want somebody to tell you what to buy and sell, or what setup matters. You want somebody to tell you what you're looking at. But that is not the best first question, actually. The better question is, what kind of trader am I becoming? Am I becoming patient or impulsive? Am I learning to protect capital, or am I chasing the endorphins and the excitement of it all? Am I building a process, or am I just reacting to candles? And that is the big idea for your first 30 days. Before you really worry about what to trade, focus on who you are becoming as a decision maker. Because if you don't get the order, but because if you get that order wrong, the market usually is going to reveal itself to you very, very personally and very, very quickly. So excitement can get you into a trade, but discipline is what helps you survive the trade. So around here, we want the process before the profit. We want skill before speed. And we definitely want protection before any sort of predictions going on. So that may not sound real flashy and all the bells and whistles, but it definitely gives you a much better chance to grow the right kind of way. So your full 30-day map. And I want you to notice something right away. This is not complicated, and it's done so on purpose. Your first month is not about mastering every market, every indicator, every strategy, every time frame, and every trading style. That kind of approach actually creates confusion, definitely doesn't create confidence. Instead, you're going to move through 4 checkpoints in order. Checkpoint 1 is language. Before the chart can make any sense, the words that are being used have to make sense. And checkpoint 2 is your plan, not a perfect plan, just a usable plan, a living document, something that tells you what you are looking for, how you are going to manage the risk, and when you are supposed to stay out. Checkpoint 3 is observation. And this is where you watch, pause, journal, and begin learning how disciplined traders actually think. Checkpoint 4 is the practice, not pressure, practice. And you're not trying to prove you can get rich. You're not trying to prove you can get every trade right. You are just trying to prove you can follow rules, and that order matters. A lot of new traders try to start at checkpoint 4. They want to trade first, thinking that's how they're going to learn, and then they're hopefully going to understand later. We really want the opposite here. Understanding first, structure second, observation third, then practice. And that is the smarter path. Checkpoint 1 is learning the language. And I know that may not sound exciting at first, but it does matter. Because when the words don't make sense to you, the chart usually does not make sense either. And when the chart feels random, new traders definitely start guessing. They guess where to enter, they guess where to exit, they guess whether something is real setup or is it just movement. They guess how much to risk. And guessing is not part of a trading plan. So in your first week, the goal is not mastery, the goal is familiarity. Start with the basic language of the market. What does that look like? Let's ask some questions. And you can pause this at any time. What is a trend? What do we mean by structure? Where are support and resistance? Or another way, where is supply and demand? What is pullback? What does confirmation actually mean? What is a stop? What is a target? What is position sizing? How much are you really risking if you are wrong? You do not need to become an expert in 7 days. Almost impossible. We've been spending decades. You just need these words to stop feeling foreign. That's it. Think of it like learning the vocabulary before you try to read the whole book. Once the language starts making sense, we promise the chart becomes less intimidating. And that is simply week one. Not trading yet, not proving anything yet, just learning the language so you can begin seeing the market with more clarity. Now let's look at week one practically. I do not want you studying trading for 3 random hours while bouncing from video to video, indicator to indicator, opinion to opinion. Uh, it's going to feel productive because you think you're learning something, but most of that time, it just creates actual more confusion for you. Focus time is the most important time. For week one, keep a rhythm small enough that you can repeat it. So 15 to 30 minutes, focused, done consistently is much better than 3 random hours or scattered information. Here's a simple daily rhythm. Watch one focused lesson or one short section of a lesson. Write down 3 terms that you've heard in those and then define them in your own words. That's how I started. Then pull up a chart. Take a screenshot of one if you're in one of our sessions. Take a screenshot. Mark what you notice and see if we match up. Maybe you notice something we didn't. But key things you want to ask: where's the trend? How do you define that trend? Where's price pulling back? Where might support and resistance be? What did you understand? What still feels unclear or foreign? And that last question is you got to do is a one honest question. You need to ask yourself one honest question that you still have. And that question matters because it shows you where your understanding is still needing to grow. So at the end of the week, test yourself with simple explanations. Can you look at a chart and explain the trend? Can you identify a key level? Can you explain where you would be wrong? Can you explain the risk you were willing to take? If you can't explain these basic terminologies very simply, then just slow down. Watch the video again, watch other videos again, pick up on this is not failure, this is building a foundation, and that is good stewardship and wisdom. The goal of week one is not confidence without understanding. The goal is clarity. So make sure you follow those steps. Now, week two, we move from the vocabulary into structure. And this is where you begin building your simple trade plan. And let me say this clearly. You do not need a 40-page trading document. I actually threw my 74-page trading plan from when I started 15, 20 years ago. I threw it away just the other day. Can you believe that? That's way too long. You don't need a 45-page, 40-page, 50-page, even a 10-page trading document. You do not need something complicated, impressive, full of terms you barely understand. You just need a usable living and breathing plan. A plan is not valuable because it looks professional and has all the logos and stuff. A plan is actually going to be valuable because it helps you make better decisions when the market starts moving and your emotions start kicking in. So your beginner plan just needs to answer a few basic questions. Again, pause if you need to. Number one, it should answer, which market am I going to focus on? You can be in all sorts of markets, but what are you going to focus on as a beginner? What setup am I actually waiting for? Are we looking for a breakout? Are we looking for a retracement? What setup are we looking for? Where would I put my stop? Where would my target be? How much am I willing to risk if I'm wrong? And that is the beginning of structure. Your first plan will not be perfect, and that's okay. The goal is not perfection. The goal is actually giving you some clarity. A simple plan you can actually follow is much better than a complicated plan you're going to abandon the moment pressure shows up because you can't find what you're looking for in your 70+ page document. So in week two, we are not trying to make you look like an expert. We are helping you become more prepared, more consistent, and less reactive. And this is the part the beginners love to skip. Strong traders do not skip this. Risk always comes before reward. Any wealthy person will say the same thing. They want to know the risk going in. If you watch Shark Tank, they want to know the risk before they know the reward. Then they want to know the reward is it worth the risk? So before you ask, how much could I make? You need to ask, how much could I lose if I'm wrong? And that is not fear. That is stewardship. A setup is not complete just because it looks good. It's complete. It's not going to be complete just because price is moving. It's not going to be complete just because an indicator or an alert system gives you some sort of signal. A setup is only going to complete when the risk you're willing to take is clearly defined. So ask yourself this question: where am I wrong in this trade? In trading language, sometimes they call it invalidation point. It just simply means at what point is my trade idea, the look of it, no longer going to be valid? And then ask yourself the question: what is my position size? In other words, how big should this trade be based on the amount I'm willing to risk? Then ask, what is my max loss limit? Okay. What is my max loss limit? Because if you do not decide when to stop trading or a trade, your emotions are going to decide for you. So finally ask, when am I done for the day? Sometimes discipline is not taking another trade because you're having a great day. Sometimes discipline is closing the laptop or turning off the PC, protecting your capital, and being able to come back tomorrow with a clear head. So, and I love the aviation comparison here because, Al was a retired pilot. I fly. Pilots do not wing it. They use checklists because responsibility is way too high to rely on a mood, a feeling, a memory, or even the excitement of flying. And trading should be treated with the same type of respect for that process. In week 3, we move from building your plan to learning through observation. And this is where Trade Master's content becomes a training room for you, but only if you watch it the right kind of way. Do not watch like a signal chaser. Watch it like a student. When someone is walking through a chart, do not only ask, would I buy here or would I sell here? Ask better questions. Questions like, why are we looking at this? Why did we pick that particular asset? What is the market structure? What is the trend doing right now? Where are the key levels? What would make this setup qualify? And what would make them leave it completely alone? And that last question is very, very important. Sometimes the best lesson is not the trade that gets taken, it's actually the one that gets passed on. And that is where your discipline shows up. At Trade Masters, we're not trying to train you to blindly copy decisions. We want you actually learning and understanding how to think through the decisions. So during week 3, keep a notebook nearby, pause videos when you need to, write down the thinking, ask what was required, ask what was missing, ask why a trade did or did not qualify. And that is how you stop being just a viewer and start becoming a real student of the entire process. And during week 3, I want you to keep a simple journal. And I do mean simple. You are not trying to create some complicated trading diary that takes an hour to fill out. You're just trying to slow your thinking down. That is the purpose of the journal. Because when you are new, it is very, very easy to see what you want to see. You want the setup to be there. Everybody does. You want the trade to work. Everybody does. You want the chart to confirm what you are already hope was true because you want to be right. But a good journal pushes back on that. It forces you to write what you actually saw, not what you hoped would happen. So after you watch a lesson, watch a market breakdown, or even one chart example from time to time, ask yourself 4 questions. What did I see? Why did this setup qualify, or why did it not qualify? What emotion showed up while you were watching it? And what did I learn? And that emotion question matters. Trading is not just technical, it's actually very personal. Money is very personal. And maybe you notice that you get excited. I'm a very aggressive trader myself. I like those endorphins. You notice maybe that you want action when the chart is still messy. Maybe you notice that you keep looking for a trade before you even understand the context. And that is valuable to know. Remember this: if you do not understand the trade, it is not your trade to take yet. That does not mean the idea is bad. It means you are not ready to own it. And at Trade Masters, we're not trying to build blind followers. We are actually trying to help people build some wisdom along the way. In week 4, I love this image because that's a lot of our tools that we use. In week 4, you finally begin practicing the execution. But notice the word practicing. This is not the moment to get aggressive. This is not the moment to try to prove that you can make money. And this is not the moment to take everything you learned and suddenly throw real pressure on top of it. Week 4 is where you practice following your rules. And that may be in demo account, paper trading environment, or a simulator. I like a live account with very small amount of money because I have to have that emotional connection. Just remember, the goal is not to prove you can win. The goal is actually to prove you can follow your own plan. Can you wait for a qualified setup? Can you pass on a trade that looks interesting but does not meet your rules? Can you place the stop where it belongs and leave it there? Can you avoid chasing entries? That's a hard one. Can you avoid moving targets just because you feel nervous? Can you review the decision honestly afterwards and know that you followed your rules? That is what week 4 is all about. This week exposes the gap between what you say you understand and what you can actually do when the chart is actually moving. And that is not a bad thing. That is where real growth actually begins. And before real money gets involved, we want to see discipline show up in the practice. So after 30 days, the question is not, did I watch enough videos? The better question, am I actually getting ready? Because ready is not a feeling. Ready shows up in your process. So here are a few green lights, and it will give you some good feelings about what your process is. You can explain your setup in plain language. You can feel less rushed. You are becoming more selective. You can pass on weak trades without feeling like you're missing out on something. And those are great signs. But there are also some red flags. If you keep changing strategies every few days, slow down. If you feel pressure to trade just so you feel productive, that's a big one for a lot of people, slow down. If you feel like you need to continually tinker with your trading plan to fit the chart, slow down. If emotion is still leading your process more than your plan, slow down. Again, that's not failure. That's good stewardship. That's good wisdom. Before you even consider real money, check the basics. Do you have a written plan? Do you have a journal nearby with notes? Can you explain clearly to a person your risk? Can you take a loss without losing control? Because the first goal is not fast money. The first goal is becoming the kind of person who can handle the responsibility of risk. Only consider real money when your process is stronger than your excitement about trading. Now, let me leave you with this. Trading is a journey. It's not a shortcut. So start simple, grow slowly, and stay teachable and coachable. If this roadmap helped you, do not stop here. We've got a next video, choose your trading lane. That video is going to help you think through what kind of trading path you may actually fit your life, your own schedule, your personality, and your discipline level. Not everybody should approach the market the same way or the same asset. Some people may be drawn to shorter term trading, day trading, short-term swing trading, maybe swing trading and longer-term swing trading. Maybe you need to focus on more long-term and accumulation styles. The point is not to copy someone else's path. And too many people are doing that. The point is actually to find the path that fits your life and helps you grow with structure. So your next step video is simple. Watch video 3, continue through the Start Here playlist in the order. And if you are taking this seriously, definitely help us by leaving a comment below that says roadmap, all capitals, roadmap, one word, ROADMAP. And that lets us know that you're on the journey with us, and it helps us keep building content that helps us serve you better and in the right way. The goal of our first 30 days is not to prove yourself. It is to prepare yourself, not hype, not blind signals, patience, discipline, learning. We are grateful and thankful that you're here. We will see you in the next video. God bless.